morning. Thank you for joining us. You, along with leaders of banking sector, met the governor last week. Give us a sense of what key trends were discussed and also any insights as to where policy rates are headed.
Okay, first, thanks for having me. And my first take on inflation is that I think the economy is well on course thanks to the calibrated and very measured moves by the Reserve Bank of India to go to the targeted level. Yes, it was at elevated level, but as you know, inflation control is basically a function of both monetary and fiscal policies. And Governor has time and again mentioned that as the economic revival happens and the supply side constraints, get addressed, I think plus to some extent the base effect, I think the inflationary trend are well on course to the targeted level. And in that context, I should believe, it's my personal view, that we are inching closer to the end of the rate hike cycle. Maybe one, or at the most two more rounds, and we should be done with that.
While credit growth has been rather robust, deposit growths have lagged advances. What is your thought on this? How is this getting addressed?
Okay, I will first start by saying that by and large, if not all, most of the economic variables manifest themselves with a lag of 1 quarter, 2 quarter, 3 quarters. If you remember March 21, CD ratio for the entire system was almost near to 70% or little below 70%. And for my bank, it was as low as 68%. But March 22 and thereafter, it has gone beyond 76%. So as I said, there is a lag effect. Economic revival, we all are aware that it's happening across the industries. But it will take little time. Deposits have not been able to keep pace. But today there was a heartening news when incremental deposits have outpaced incremental credit during the last fortnight. This is from the RBI statement, weekly statement that I got to know. So with a lag, this is typical of an economic upswing. Business cycles as such, the downturn, when it turns into an upturn, there will be calibrated movements. I think we have reached the point of inflection now. From here on, I think the credit growth and both the deposit growth.
Thanks so much for joining in. Mr. Das, speaking of deposit growth, how are you looking at trends in terms of cost of deposits? Can we safely say that net interest margins have peaked, or would loan growth offset that?
Okay, very interesting question. So as I told at the end of Q2, when our balance sheet, I was speaking with your channel only, I was saying that most of the banks, they have registered a phenomenal rise in the net interest margin. One of the reasons is, the effect of policy rate transmission. Although most of us have not fully transmitted the policy rate hike into the lending rates. For example, as against 190 basis points rise in the repo, we have only 70 basis points we have raised in our MCLR. But 47%, 48% of my assets are external benchmark linked, which were repriced from day one. So that has also helped, growing our interest income. We somewhat faced a setback when there was a downtrend in interest rate cycle. Now this is what it's making up for that downtrend. So we got a good boost in our interest income. Second is deposit. The NIM for my bank domestic is 3.49, global is 3.04. Now I said a few weeks back that yes, there will be some erosion in the NIM in future because deposits do take a longer time to get repriced as against assets. So Q3 and Q4, when we have affected change in the interest rates and deposits, there will be definitely some impact on the NIM. I will not say NIM has peaked. Still, there is a headroom, provided we have a right basket of assets and liabilities. But there will be some impact definitely. And I'm sure going forward, because the loan growth is picking up, average loans are growing, CD ratio is growing. I think the volume growth will offset that. And I think most of the banks will be able to maintain more than 3% of NIM, which is a global benchmark.
Right now, the industry comments suggest that we're probably at the bottom of the NPA cycle, but where do you think the next credit cycle is going to come from?
In the bigger corporate segment, I don't think there is, because underwriting standards have improved quite a lot. And mark my words, we are just recovering from a downtrend. And all banks, they have credit review mechanism, credit appraisal systems, and credit early warning systems, all in place, digitized. There are 84 parameters of early warning signal system that in my bank we have employed, wherein we get advance alerts. So sector-wise, I will not see any problem in the corporate side. Yes, MSME side, because of reasons, deep-rooted reasons, and the shock of COVID, retail is perfectly fine. Only MSME sector where you need to handle the MSME segment, I think, till we arrive at a safe destination. I'm sure, including my bank, all banks are on that route. I'm sure within, I think, span of 2 to 3 quarters, this MSME problem also will be behind us. So in particular, not much of a stress I am expecting in any of the accounts except the MSME segment in general and restructured portfolio in particular.
Mr. Das, good morning. Last week there was a meeting that the RBI governor chaired that was to do with, bank CMDs as far as credit growth goes and to make sure the momentum stays. Now, having said that, New Delhi is also planning a series of meetings, including with the finance secretary. What's on the agenda?
No, there was not as such any specific agenda, but again, it was probably the first time you would have met finance secretary formally for the first time since he took charge. As you were aware, he took charge very recently. We have met him in course of certain other meetings, but again, it was basically an introductory meeting plus a kind of consultative process with regard to the plus and minus that the banking sector is going through now, and to make all the banking industry people, especially PSBs, future ready. And I would like to mention here that both Governor Das and Secretary himself, they have appreciated the bank's resilience in COVID and post-COVID times, and of course, their performance in the last few quarters. So whether that is sustainable, I guess that should be the agenda there whenever we meet Secretary, plus various other things, which is only guess, my speculation only. How are we performing in various government-initiated programs, a spate of GOI initiated programs by various ministries, banks, especially those of us who are in PSBs, we are actively participating in only the agri-infra projects, even social security, all those things, financial inclusion related things, plus of course PMM Mudra Yojana, and so many other things. So I believe that would be, apart from a basic introductory meeting, these things also probably would have featured if this meeting had happened.
Okay, so that's going to leave it at that. Good luck for that big meeting with the finance secretary. Is meeting with the top bankers to get the